I'm honored.
Congratulations to you. I read that news release.
Yes.
Today's a big day for you. You ended up with a very prestigious, important position with worldwide markets. You want to tell
Right.
us a little bit about that?
Yeah, sure. Actually, what led me to this decision, this has been in the making for like 5 years. I've been kind of on my own, working as a consultant to different buy side, sell side entities in the industry, and including worldwide markets. We've done a lot of business development activities in Africa and the Middle East and some parts of Asia as well. And most recently, they have kind of the top management and the owners. They asked me to come on board, in a more official capacity. And to be honest with you, Dale, I've had this kind of offer before from many different companies, and mainly due to my background in the industry, specifically in business development in the Middle East. I started in 2001, 2002. And ever since then, I worked with two publicly traded firms, and I built their kind of Middle East presence. And as such, a lot of companies, they were trying to kind of get me on board with them. I worked with them on a consultant basis independently. However, I felt that worldwide markets was one of those companies where I am not the smartest person in the room with them. So I want, it's people that I admire a lot, people that I know they have pedigree in the industry and that I'll learn a lot from. So therefore, I kind of decided to join.
So it's not giving up your independence. It's a growth step for you. Because
Absolutely.
I believe you surround yourself with people better than you. You
Right.
rise to that occasion. You surround yourself with people not as good as you, and you sink to their levels. So I
You're so
wish
right.
you all I wish you all the success in the world with worldwide. And I like to start at the beginning. So you told me you started getting involved in the beginning of this millennium. You want to tell us a
Right.
little bit about the early part of your journey, Amro? Who was responsible? Whose fault was it for you getting involved in trading? Who do you blame? Do you have any mentors or people that influenced you in your trading along the way?
Well, my start in this business was actually with FXEM. I joined them around 2001, and that's one company that I really admire, and more importantly, admire the CEO, Drew Neff. He is somebody who really kind of runs a very tight ship, and he really does. And and that shows, through the recent turmoil that was caused by the SNB, the Swiss National Bank. If it was any
Yes.
other company other than FXEM and its leadership, I don't think they would have survived, to be honest with you. So I worked
Yeah,
with them from
many bit the
2001.
dust.
Yes, and many lost a lot of money, but they're just keeping it in the closet. But FXM being a publicly traded company, of course, they couldn't do that. Anyway, I worked with them for like 7 years. I started as a just a retail trader and sales trader, and I moved up the ranks until I went to institutional sales, and from there I was handling the entire Middle East and Africa region for them. In 2008, I was headhunted by GFT back then, which was taken over by Gain Capital, another publicly traded company.
Right.
So I worked, I was lucky enough to be at the right place at the right time, where I learned from great mentors, and luckily they also gave me kind of the freedom and the space to be able to be creative in a region where this is the prize of any FX company, the Middle East, because the average deposit per account is much higher than any other region. It's probably 3 times as high as, let's say, an average deposit in the US or even Asia.
Interesting.
So
Okay.
yeah, so everybody, all the companies, they want to have a foothold here. And I remember that I was one of the first people from the US who came to this region to kind of even explore it. And it's funny, like I compare, I have a story that kind of puts it perfectly, the comparison between what the region used to be like and now. Now every Tom, Dick, and Harry is here, from all over the place. Companies from the U.S., Europe mostly, as well as the kind of the second tier jurisdictions, from maybe kind of like East Europe or something.
Cyprus, you mean? Those you consider Cyprus a second-class jurisdiction, or a no-class?
I wouldn't say well, I would say definitely not prime class, as in the FCA or the CFTC and NFA in the US, and so these are like top tier. Even Australia now is considered top tier, but Cyprus is definitely up and coming. But the problem with Cyprus is a lot of I guess maybe because in their quest to kind of become this financial hub quickly, to take advantage of the fact that the NFA was tightening on retail brokerage firms in the US, they kind of made it way too loose. So they attracted just everybody. But now they're getting their act together, and they're definitely getting better.
I'm interested with the belief system in the Middle East about lending and interest, etc. How do the people in that region feel about leverage, which it really is a loan? I'm wondering if that comes into play with Middle Eastern investors, if they want to avoid leverage because of their belief system on borrowing money and lending money.
So this is first of all, this is a very smart and culturally sensitive question. So I really appreciate that you brought that up. So the interesting thing, Dale, is so basically the problem with leverage is that you're borrowing money from the broker, right? And as such, the broker, you charges you interest, right? Or actually pays you interest if you're doing a carry trade properly. So the way, and we were actually pioneers at the time of this. The way we thought about it, and we did an analysis, and we found out that overall, like at the end of, let's say, the month, the net rollover or the net interest usually comes down to almost zero, right? So because sometimes people are long, some people are short. So what we did was we said, okay, you know what? To make it compliant, we will completely eliminate the rollover, right? So you trade on margin. You don't get rollover when it's due to you, but you don't also pay rollover when it's due from you. So in a way, it's kind of like completely taking that part out.
Yeah, so you just wash it out and you give back a little bit of a profit center to accommodate people's belief system.
Exactly. But what's interesting is that some traders are really smart. So they figured that out. So then what they did was they would say, okay, you know what? I would like to open a non-interest account with you, right? So they open a non-interest account with you, and they short pound yen at the time, a few years ago, when the differential was like 4% between the pound and the yen. So they would short pound yen with, let's say, with us on a non-interest account, and then they would open another account that's a regular account, and then they would buy pound yen. So on the short, so they're completely hedged, right? The only difference is they're collecting free money, because here when they're short, they're not paying interest, whereas when they're long, they're actually collecting interest. And a lot of people made a lot of money from that. I remember, like,
the creativity of finding an edge.
And only the market can really extract that creativity,
So we had a historic start to 2016, Amro, and the dollar's been struggling since Draghi. So I'd like to switch to the markets a little bit here and get some of your views, and maybe after we talk a little bit about the markets, we could even get some geo views from your perspective, because you're in a key area. I hope you weren't in that hotel that was on fire in Dubai on New Year's Eve. And what is your view on the dollar? The consensus view is that the dollar bull market is still intact, and that all this is a consolidation before another surge to the upside. Is that your view? And if not, is it possible that the dollar might be the biggest surprise in 2016 to the downside?
So I agree with the fact that I think the dollar bull run is still intact. I don't think it's going to be as steep as we have seen in 2015. However, the dollar is still the prettiest house in an ugly neighborhood, for the time being. Mainly, we have a few reasons for that. One of the main reasons is the interest rate divergence, interest rate policy divergence between the Federal Reserve and everybody else, right? Everybody else is really hurting. So, the economy in the U.S., we're doing really well. In terms of, well, not really well, we're doing well. We're doing better than everybody else. Europeans are still, they have a lot of structural problems that, nobody is kind of really talking about anymore because they have bigger problems, and that's, no growth. They have this refugee problem that they have to deal with, and security that comes with that as well. And as you know, security supersedes everything. And if people are not really feeling secure and they don't understand what's going on, there's not going to be any investments. Emerging markets, and I travel a lot in emerging markets, especially Africa. So Africa, used to be the darling of the emerging markets generally. They used to be the darling of the markets and hedge funds and investors and stuff like that. But recently, they haven't.
And China heavily invested in Africa for natural resources.
Exactly. So emerging markets have a double whammy. When we had the financial crisis, and all the central banks around the world were printing money and they lowered interest rates all over the place, emerging markets were they found it very easy to borrow money, and they borrowed about $10 trillion in US dollars. Right? They basically issued bonds and they in dollars. And at the time it was low interest rates and everybody was happy, and they were building different projects that were really not they were either not non-producing projects, or they were expanding their natural resource production capacity, right? So what happened was, fast forward 4 or 5 years, commodities have tanked. Interest rates are starting to kind of move up for the US dollar. So now a lot of emerging markets are finding it, one, very difficult to have any kind of revenue because commodities have tanked by like almost 50% at some point. Two, because now the servicing of all that debt is really crippling them. So and that's kind of forcing them to add more taxes on businesses and just creating an unfavorable market condition. So now all this capital that is leaving emerging markets, there's nowhere else to go but the U.S. At the time being.
Okay, so that's I think this monetary divergence has pretty much been talked about for a long time and in the market, and I think that the euro perhaps can make a move if we get through 110 towards 113. I guess everyone could still say that's going to be a great shorting opportunity. Do you think that eventually the Federal Reserve, who's losing the currency war and talks about worrying about the strength of the dollar, perhaps does not go ahead with further tightenings because of what's happening in the outside world vis-a-vis China and emerging markets, that even though we had a strong jobs number on Friday, that most participants said makes it a lock for another interest rate increase in March or April, that the Fed is really not data dependent, but that they're stock market dependent, and will depend upon where world markets are into that time frame.
So that's a really interesting argument. The thing is, if you had asked me this question, kind of before the Chinese market opened this week or last week, I would say yes. The Fed is going to continue to raise interest rates in 2016 at least 2 to 3 times, because they have 8 meetings in 2016. So out of the 8 meetings, chances are they're going to raise at least 2 to 3 times very soon. But they have told us that they are also aware of the impact of their decisions on the kind of especially emerging markets, especially China. And honestly, with what we have seen in China last week and today, it has been not an assuring factor at all. So I think that might give them some pause. But I don't think the Fed is really worried too much about a strong dollar at this point, simply because, again, for 2 reasons. One, it's helping the U.S. consumer immensely. Add to that, energy is significantly lower than it is, and with every penny drop in gasoline, the U.S. consumers save I don't know how many hundreds of billions of dollars. So besides exports only, they constitute about 14% of our GDP, whereas consumption, constitutes like 72% of the GDP. So I think you're right to say that they'll be kind of focused on. They will definitely heed what happens in emerging markets based on a strong dollar. So that might give them some pause. But I still think that at least we're going to have two interest rates raises in 2016.
Okay, so you're looking for a subpar euro parity is finally going to happen in 2016?
I think it will, if we see it, I think we're going to see it probably, the second half of 2016. And again, the reason why is, Europe. If you look at Europe, there is really nothing to be cheerful about, with the exception of maybe a few. You have to be very selective based on certain stocks in Europe. But you can say as the eurozone, they can. It's a good place to kind of invest, put money in. And the ECB, you have to keep in mind that the ECB, their hands are tied because you have to convince 27 different parliaments and 17 different parliaments on the eurozone alone to do something. And there is a lot of discrepancy between, let's say, Northern Europe or the northern part of the eurozone versus the southern part, right? So the ECB is not free to kind of take decisions right away, decisive decisions. But the only thing that they have in their hands is to actually keep weakening the euro. And I think they're going to continue to do that. They're not happy with the euro being at 110 or 109 right now.
Okay, so you brought up energy. And
Yes.
energy has really, turned the junk bond market, MLP, sour. Going to be a lot of bankruptcies forecasted here. Being in the region, are you surprised that there is no geo-risk premium in the price of crude right now, considering what's happening in the Middle East, especially the escalating tensions between Saudi Arabia and Iran, and even if there isn't a hot war, the fact that there could be social unrest with a weaker kingdom in Saudi Arabia because they don't have the revenue to placate the masses as they do with supporting them with something that would be considered social security type payments here in the U.S. And is it possible they're pulling out all the stops? They're going to do an IPO for Aramco. Is it possible that the Saudis at some time this year depeg from the dollar, the real from the dollar?
Okay, so this is a very loaded question. First of all, let me start with the expected wave of bankruptcy in the U.S. Just to kind of give you a quick statistic, in 2006, the total debt of the shale industry was about 50 billion. In 2015, we ended the year with 200 billion, in collective debt for the shale industry. So yes, we will see some bankruptcies, which will lead to consolidation. However, I think the shale story in the U.S. is still strong and is still intact, and the reason being is, most of the expensive, non-productive work has already been done. The exploration, the licenses, and all that stuff. So whatever company that is going to come and take over some of the smaller shale players will be ready to turn on the ignition on some of these wells as soon as oil starts going up. And this is actually one of the reasons why I believe that they're going to be this long-term, sustained pressure on oil prices, because the U.S. will continue to produce, north of, 8.5, 9 million barrels a day. So this is on the shale side. On the regional side, honestly, Dale, I am not surprised that there is no geopolitical premium on oil, simply because there is a lot of oil in storage all over the world, right? And there is and if this happened like 20 years ago, you would have seen a premium on oil prices. However, now we have so many different people outside the region, particularly the U.S., that are producing oil that mitigates or lessens the impact of any geopolitical tension in the region. But there's an even more important factor that is kind of suppressing the geopolitical premium, and that is OPEC, in which Iran and Saudi Arabia are members, they were hoping to kind of get some kind of a consensus among members to lower to lower production. So the more tension you have between these two countries within this organization, whose collectively whose influence is waning anyway because they're only controlling like 30% versus 50% in the 70s. So the fact that they have this geopolitical tension kind of lowers the possibility of a consensus between members to lower production. As such, as such, what they will actually do, not even stay neutral, they will ramp up production in a way to kind of, for lack of a better expression, to kind of, to basically to drown each other out of the market. And Saudi Arabia can afford it, at least for the time being. For the next at least 5 years, they have a huge reserves. But in addition to that, they have just taken very aggressive measures to cut costs, to cut spending, and they have lifted some price subsidies, on different things. So far things are good, and the people seems to be behind the leadership there. But I don't think Iran can withstand the same pain that Saudi Arabia can for the time being, because they don't really have a lot of reserves. And this is the time when they just thought that, okay, now we're going to join the global community, and they need oil at closer to like 80 or 90 because of all the social spending that they have and all the security spending that they do.
But Saudi's production cost is what, about $2-3 above that? They make money.
You see, you see, that's another advantage that the Saudis have. They can. I was talking to someone who's like an oil field engineer, who works actually in that region, and he was telling me the Saudis can literally, they have some wells where they can produce it. They'll be profitable at $2.50.
Mm-hmm. So let me ask you this. I've always felt that when there's a product that's private and then is finally offered to the public, that's the way of transferring risk to the public, and at times the public is bag holders. Why are the Saudis going to do an IPO on Aramco, in your view? Is it budgetary constraints and they need the flow of revenue? What do you think is behind it happening at this time? And you would have thought it would have been a better time to do it when crude was $80 or $100 rather than $30. Right.
So I've read the news, but I don't know the whole details. But my guess is they will float only 5% of the stocks, right? And not only that, they will probably only make it exclusive to Saudi citizens, right? So this is a common practice where you have like a blue chip heavyweight company, that's making a lot of money, a lot of profits. Then you float part of it, but you only float it to your citizens. So that's kind of, in a way, one way to share the wealth. So
like Mexico did.
Like Mexico did, and yes.
Okay, I see.
Exactly.
I understand.
Yeah.
What's your feeling from investors and people that you deal with in the region? I know that they're traditionally precious metal buyers, and we had a bit of a bounce in the gold from the 1050 area. It hasn't been a moonshot, but the shares have been acting okay. The miners have been acting okay. What would you say the preference is among the consensus of your investors preferring gold over equities or equities over gold?
Okay, so when you say equities, are you talking about regional equities or global?
It could be regional, it could be U.S. I know a lot of Middle East money finds their way into the U.S. markets.
Yes. So, the Middle East traditionally has been a hub for gold trading, and especially in Dubai. Dubai is probably one of the biggest, gold trading hubs. We have the Dubai Gold and Commodity Exchange. It's huge. The volumes they keep growing exponentially, and I think they're gonna continue to grow exponentially in the next few probably months and years. Why? Because just recently they launched, about maybe 2 or 3 weeks ago, they launched a physically delivered spot gold contract, right? So each contract is 1 kilogram bar, and it has to be come out from a they call it DGD, Dubai Good Delivery accredited refinery. But what's interesting about this
Okay,
is that
so that's a cash and carry market similar to what was launched in Singapore to
yes,
try and
yes,
emancipate gold from the paper market.
very similar. And I think the
Okay.
reason why they did that, uh, one of the reasons that they did that, they noticed that a lot of Chinese investors are actually coming to Dubai to either set up companies or to actually just buy gold. So they made it very simple. If you're sitting in Hong Kong or China, you can literally. And the nice thing is that the transaction is done on the exchange, so you don't have that counterparty risk. So you're looking at the prices, the global markets prices you buy, and then 2 days later you get your bar whatever you want, like in your bank, or you want it shipped to you. So this is going to kind of accentuate the volume of trading. I was talking to a gold miner yesterday who brings gold into Dubai, gets it refined, and then he sells it to different banks. So he was telling me that he thinks the price will continue to be subdued. However, what he's saying is the volumes keep going up. So look, the demand for gold, for physical gold, is very high and is going to continue to get higher and higher. However, the price will always, at least for the next maybe, for the next few months at least, maybe even to the end of 2016, I think we'll probably maybe hit 1200, but I don't think we're going to go beyond that. The reason being is you have a lot of money for the past 5 years. I'm talking about trillions of dollars in pension funds and all these guys who used to be who were looking for safety, right? Gold definitely gives you a lot of safety. However, the fact that gold does not only not give you any yield or any returns, it actually costs money to own gold. It costs you about
Storage.
50 yeah, exactly, about 50 basis points in storage. So all these pension funds and hedge funds who need at least 4% returns in order for them to pay the bills and to pay the retirees and all these people, they have kind of not shunned gold, but they have pushed gold down in the list of the safe haven instruments that they would be interested to invest in. So they would definitely go to something like maybe U.S. Treasuries, where they can get 225 basis points over gold, and at the same time you still get a measure of safety there. But I think gold is going to get this time. I personally believe that 2016 will be the year that will mimic what happened from the year 2000 to 2012. We're going to go through this decade-long appreciation year over year of gold. That's my opinion.
So you're looking for 2016 to possibly be the bottom of this decline from 1900.
Yeah, especially yeah.
There are fib targets like 880 in gold. Do you think that we'll see sub 1,000 sometime this year?
The reason why I don't think even if I think 880 is is way too low, and the reason being, I read I think it was done by the LBMA or something. There was a study where a survey of the largest 40 gold mining companies, and the break even, that was about maybe a year and a half. The
Yeah, 1100.
It was actually 1300, and then
Okay.
they did some cost cutting and all that stuff. They brought it down to 1100, 1050. So that's why you notice that every time it goes out to 150, we pop back up, because it's not worth it for them anymore. So 880, I think that would be very, very low. I mean, that's,
Okay, 980. How about 980?
yeah, it's 980, possibly, possibly 980. You know
980
why?
going once, going twice.
But I'll tell you what. I think even if it goes there, we're gonna have like a V-shaped, type of formation, because every time it comes close to 1,000, we see a lot of buying, and you see it in the volume of places like the DGCX, where people get the physical.
Any view on the U.S. markets, which have been, the best, cleanest shirt in a dirty neighborhood?
Yeah.
Last week was the worst opening week
Yeah.
of the year in history. As the first 4 days, it was since 2008, but by Thursday and Friday, it turned out to be the worst in modern history of the U.S. stock market. Way overdue for correction. There have been stealth corrections in different sectors along the way all last year, with the averages holding up and moving sideways. Any view, are you in the same camp that if the dollar still could continue its bull market and it's pausing, that this is just a pause in U.S. equities before we see new all-time highs?
Okay. So just before I answer that, allow me to just say something about, since we spoke about gold, I want to just say something about silver. I think also, I think silver is going to do really well in 2016. And I think it's going to be a star, like a star asset. The reason why, and I'm not a silver bug or a gold bug, by the way, but the reason why I say that is because we are, I think, experiencing a paradigm shift in the way we energize our growth, our economic growth. And especially after the COP21 agreement, where we had for the first time 187 countries sign up, where if you compare that to the Kyoto agreement a few years ago, there was only like 27 countries. So
silver's used for generating electricity, like copper?
Exactly, that's exactly right. It's used. It's a major component in solar powered panels, and solar power right now is approaching parity in terms of efficiency with just the regular grid. So, and you see it. Just look at mega solar power projects. Google that, and you'll see a lot of different mega projects popping up all over the place. So I think solar power has reached a tipping point where now it's going to really take off, and with it is silver will take off as well. So
that gold-silver ratio, the gold-silver ratio should really begin to widen out again.
Yes, I think it's it should start coming closer to when silver was maybe in the 20s or 30s.
Okay, I like silver, or I would have dyed my hair, and I see you're getting a little on your temple. So, very, very interesting take. I appreciate you doing that. Now, perhaps you could move to what people are worried about, their 401ks. People in the U.S. and even across the globe have lived through two financial crises: the dot-com pop, where the market lost 40–50%, and then again in 07, 08. And you're having a lot of people, even like Soros, saying that this reminds him a lot of 08. What are your views?
So there's a difference, and the difference is I think they're going to be, look, everybody's worried and scared right now. So as such, you still have all these hedge fund managers who squared their positions end of 2015, and they're still just sitting on the sideline trying to watch what's going on. So I think the scared money is going to leave, but then the smart money is going to start coming in, from lower levels. And the reason why I say
about
that
1800 S&P, 1800.
Probably, yeah. And so what I wanted to say is, I think they're going to be selectivity, like higher selectivity, as to which sectors and which stocks within those sectors. So, for example, one sector I really like, and I've been kind of following closely, is the defense sector. Look at Lockheed Martin, Northrop Grumman, all these companies.
Right.
When you look at even if you look at, let's say, the GCC region, they're cutting down even Saudi Arabia, which is kind of the whale of the region. They have cut down their budget with the exception of defense, and that goes for the entire Gulf countries, and now Europe also. The NATO NATO countries are going. NATO countries alone, they spend about $900 billion in defense, in the defense sector. So I think that sector is going to continue to do well, at least for the next 2 to 3 years. So that's where I would then allocate some of my portfolio to. I think the housing market in the U.S. still will continue to do well. and maybe healthcare as well. There's
Okay.
another sector that I'm watching, which investors, can invest in from the U.S., which is the healthcare industry in Japan. Japan, the median age
Okay,
is
so
about the age of
that's a
48.
demographic argument. Healthcare in Japan.
Right. Yes.
Okay.
So there is a one ETF, I think it's called Wisdom Tree Japan Healthcare. It last year, 2015, it went up by close to 40%, and I think it's going to continue to do that in the next, let's say, 3, 5, 10 years because of just the demography. That
Well,
demography doesn't change overnight.
okay. Well, what you said about silver, would silver miners with strong balance sheets and not a lot of debt be attractive, and solar with what you have said with it being the new paradigm shift?
Yes, yeah, I believe so.
Okay, so I want to wrap it with a geo question.
All right.
When you go to bed at night, Amro, and you look
Mhm.
at what's happening in the South China Sea, you see what's happening in the Middle East, you know Putin is desperate and projecting power. What is your biggest worry geo-wise in 2016? Or is everything just okay and the glass is half full and people are just posturing? Or could there be an accident with the U.S. flying jets over North Korea after a nuclear test, or the Chinese landing planes on their artificial islands, and we're sending the Navy, and Iran launching missiles, even though there's a peace treaty with Iran, not a peace treaty, but a nuclear deal with Iran. Uh,
Right.
there's so many different pots bubbling on the stove. From your perspective there in Dubai, what's the biggest concern that could end up being a black swan?
I think the geopolitical tension between Saudi Arabia and Iran thus far is kind of is playing out via this kind of a couple of proxy wars that are going on in the region. So my concern is that that escalates into something kind of more direct, and that will be a huge problem. I think that will
Okay.
completely take out the region as an economic engine, albeit like a minor one. That's when I think we'll see oil kind of start shooting up back to 50s and 60s and possibly even 70s. That's in this region. In the South, in South China Sea region, like South China Sea. Um, as you said, I'm not worried about China. I think China, they know exactly where they stand vis-a-vis the U.S. in terms of their military power. I'm not too impressed by what they have so far. But what I'm worried about is countries like North Korea, where they're just
Yeah.
totally
Rogue.
unpredictable. Totally
Right.
wrong and totally unpredictable. So also I'll put on that list. You know, we have a lot of like these crazy terrorists
Okay.
and again the lone wolves all over the place. They again unpredictable. You can't really, despite the fact that we we watch everything and we see everything and we kind of try to predict what happens next. I'm always like taken aback by their ability to surprise us. Like what happened in France and what happened in the U.S. And so these are the things that kind of worry me. I just hope that
Yeah.
2016 will be a better year.
Yeah. And the surprising thing to me, before I let you go, Amro, was how
Yeah.
quickly a country can close its borders over an incident like that, and how
Right.
soon the grocery shelves are emptied off in Belgium,
Oh,
etc., during the Paris attack. So I want to thank you so much for taking the time
thank you.
to talk to us today. And congratulations again with
Thanks, man.
your new position at Worldwide Markets. And
Thank you.
I hope that 2016 is your best year ever, my trading warrior brother, in all ways. Inshallah.
Thank you.
Inshallah, Amro.
Inshallah. Thank you, Dylan. Hey,
Very
thank you,
nice meeting
Dylan,
you,
and
buddy.
thank you.
Thank you,
And
buddy.
in honor of you, I made my coffee in a Middle Eastern mug for you, so I'll send you one.
Oh, okay. Thank you very much, Amro. Everybody,
Thank
thank
you.
Amro. Amro Zakaria Abdu.
Appreciate
Best
it,
way for
everybody.
people to follow you would be I have your Twitter handle at
Yeah.
Aswagamal. Any other
Yes.
place for people to follow you?
I think that's the best place. Aswad Al-Mali
Okay.
is Arabic for capital markets, so it's multilingual. So,
All right, buddy. Thank you,
all right,
Amro.
thanks, Dylan. I appreciate
Have a
it.
great
Take
week.
care.